Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Okay, I lied. I don't seem to be satisfied yet with the amount of Tesla shares I have. I mean, I'm more than satisfied as to their value, and as a result, I'm able to do what I enjoy for a living, talk about Tesla. But the thing is, what would I want to buy most of if I sold my shares? Well, it would be more Tesla shares. That's what makes me happy. I don't really invest for the purpose of simply hoping to make money. I'm of the mentality now where I just want to be as much a part of this company as I can. I love owning it, and the more I research it, the more I love it. The next investment I am most likely to be interested in will probably be Starlink anyway. I think I'm done researching and looking for unicorn stocks. I'd rather focus on keeping what I have. Bear that in mind. As a result, this might not be totally rational investing advice. This is just me finding various strategies and techniques of owning as much of Tesla as possible. It's what makes me happy. Of course, I've run lots of scenarios that will tell me I will get 5 to 10x return even at today's stock price. Well, hey, even some scenarios tell me more than 30x still to go. But that's not what gets me the most excited, although the stock price going up is fun. But at the same time, it's somewhat conflicting. Every time the stock price goes up, so does my wealth, but it also means it's harder to afford more shares. Maybe I should just try and be more satisfied with what I have, but it makes it very difficult to spend money on things. I mean, if every $1,000 I spend now, I think, well, that's going to be worth $5,000 in 5 years' time if I invest it in Tesla. But at the same time, my Tesla portfolio would also be up 5 times, which makes me pretty wealthy anyway, so I need to work on a suitable balance. Of course, that's if the stock went up 5x, which would mean my leaps could have gone up as high as 20x for some of them, but at the same time I can only afford to exercise so many. Anyway, if you are a long-term investor, the fickle reaction of the market really is a distraction more than anything. What matters are things like gross margin, production rates and battery technology, just to name a few, when compared to the stock price. These things get me much more excited. If I want to try and make money as quickly as possible, then I'd probably be trading crypto. But again, I only even hold Bitcoin when it comes to that, and obviously HODL there too. My previous strategy before has been to buy leaps, only when the stock dips. And we have had a few lucky dips this year I was able to take advantage of. But now the stock price is obviously significantly higher. It makes it harder to find the conviction to press the buy button. Now, I was not expecting to see any more dips. Well, I wasn't expecting the stock price to potentially get as low as $1,000 maybe again, which now it might possibly do. There will always be dips, but we may never see dips at various price points again. For example, there is a very high possibility that we will never see a dip in the 500s again. I think especially after Q4 comes out. With Elon announcing the sale of 10% of his shares, well, the market is unsure how to react to this. This is not something there is a lot of in history, and a 10% sale of his shares at around $25 billion is a reasonable amount. But if this share sale is perhaps done over several days, then perhaps it will be smoothed out in the market. Possibly. I don't think Elon wants the stock price to become volatile. So I would say that the market will price it all in as much as it can anyway, similar to when we had the opposite effect of the S&P indexes buying Tesla. But there are a lot of people who realised they missed the boat on Tesla, or a lot of us that realise again how successful this company is going to become, and a lot of this has simply been because of the latest stock run. The stock price is so compelling to our confidence and conviction that it has been validated by the market, and that's what so many investors base this on. When in actual fact, it has been what I've been telling you all year. Just look at the financials, look at the future of the company, work out your valuation from there. The stock price will just mess with your head. Anyway, there's still plenty of emotional and reactive investors out there, and they all want more Tesla shares. Investors will start buying this dip, but it might not dip for long. I mean, a lot of you are saying to yourself now, wow, if it dips below $1,000 again, I'm going to start buying. That's easy to say now, but what about when the wind changes direction and the headlines come out and the FUD we might expect to accompany it? Similar to when the outlook wasn't looking so good when we were trading in the 500s earlier this year. Are you going to have the same conviction then as you do now? And what if you buy the stock when it is around 1,000 and it drops to the 900s? And over what period of time will this dip occur? Will it dip for just a few days? Will it stay down for a few weeks? there is a potential opportunity for picking up some extra shares at a good price. I had actually been recently rethinking my investment strategy anyway, and I think it might work well for what is happening now. Now the investment vehicles I use to do this may be different from you, for reasons I will mention, but the overall strategy could be useful to you either way. But I do not have enough cash, so I'm going to have to sell shares to do this. And with the sale of these shares, I'm going to buy leaps. For every leaps contract I buy, then I need to sell around 30 shares possibly, but then I have control of 100 shares, over 3 times as many. As for many of you, you may have cash available to invest and are happy buying shares rather than options, which is sensible, especially if you don't want to risk investing in things you may not understand. Okay, so what's my full strategy? Just one contract, just one purchase? Well, this is where I may differ from many of you, as I'm happy to keep selling shares to buy more contracts. This is almost the perspective of somewhat of an abundance of capital, at least for some time, as in I still have a lot more shares than I do leaps. With this, I am able to take an interesting dollar cost average strategy. So, for example, if Tesla opened at $1,100, then I could sell some shares and buy a contract. Then if it dropped to $1,000, I could sell some more shares and buy another contract again, rinse and repeat. On the other hand, if it jumped from $1,100 back to $1,200, then at least I did manage to get one more contract, compared to holding out for a potential drop to $1,000, as we don't know how long this dip will last or how low it will go. For me, I feel like this is what works best. Then, even if it dipped to $950, I would do it again. But I can't really see Tesla's stock price getting much below $1,000, or lasting at that price for long, even with some strong FUD being thrown around. Although I could keep going, I think I will likely call it quits after about 3 contracts, as I do still plan on exercising them, and I find it unlikely I'll be able to find the funds to exercise many more than about 3 contracts. But if you have cash and are looking to buy more shares or options with the cash, then your strategy may be different. I have already built my position. I am simply going to pick up a few extra contracts if they go on sale low enough. Once this dip finds a bottom, it could go in the other direction very quickly, and then various events could end up sending it to all new time highs soon enough. If you're buying shares, perhaps you're trying to buy 10 more shares, for example, then think to yourself, if it drops to $1,100, then that's over $1,000 less than you have to pay from when it was $1,200, or you can now afford 11 shares for the price of 10. But maybe you might want to try and act like an investing pro and score some Tesla shares at $1,000 stock price and save another $1,000 on your investment. But what if it doesn't drop that low? What if it goes up instead and never comes back down again? I have seen investors try and save an extra $500 or so on buying their shares, putting in your buy prices just a few dollars below the market price even. Say if it was trading at $420 and they wanted to be clever and put an order in at $410, only for their order not to be picked up, and those extra shares that would have ended up making hundreds of thousands of dollars, I joke you not. So try and think through scenarios of which one you can live with better. Can you afford to live with the fact you may have bought your Tesla shares 10% cheaper if you'd waited? Or would you struggle more with the remorse that you never ended up buying these 10 shares in the first place? Now, one solution to the above issue is buy 5 shares first, and then if it drops, you buy 5 more. That is one way to reduce this issue. However, this has not been my strategy in the past. I have tended just to buy at the market price to make sure I get in. I'm going to post all my trades live on Twitter for you to see in real time, so if you want to know what I am doing, then please follow me there. Likewise, please comment below and tell me all your strategies of how you plan on making the most of a potential dip. But like I said, I have built my position, and as I've also said in the past, I am of a contrarian mindset now. I am only waiting for dips, and I may even do some actual trading again soon too. Bear this in mind, once again, I am likely at a different stage from many of you. So if you have built your position but still want to get some more, but don't have any cash, then that is the position I am in. And if the stock dips, I will sell shares to buy leaps. If you have cash that you are waiting to invest and still trying to build up your position, then think about what you're really trying to achieve. Try to visualize yourself in the future 5 years' time, and if Tesla's stock price is up around $5,000, which choice would you be most glad that you made now? It's almost like hindsight, as you're projecting yourself in the future and reflecting back on what you did on the past. except the past is now. Does that make sense? And you're going to be kicking yourself that you slightly overpaid, or you're going to be kicking yourself for not buying more. When I started buying up Tesla shares, the stock price did not keep going up. It went down often to much less than what I paid for them. But I don't kick myself for not waiting for a lower dip. I would have kicked myself much more for not being in. But we all act differently, which is why I don't tell you how you should invest, but try and help you think of what options are available and what might work best for you. But bottom line, there's a potential dip around the corner, and it makes sense to be prepared and have a strategy. And I think this is also really important to remember. We have 2 massive factories opening shortly. We have 4680 batteries going into cars next quarter, and this Q4 is going to be very impressive. And that's just what's happening over the next few months. We still have the next 5 to 10 years on top of that. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.